What's up, everybody? Welcome to your January 2026 market update. Happy New Year for myself and everybody at the team. Hope you had a great holidays, whatever that looked like for you. You know, what's happened in December, stats-wise, real estate-wise, holiday-wise, starting fresh, new year, new perspective, new attitude, I guess. So this year, we're gonna switch things up a bit. I'm not gonna throw boring numbers at you. I'll try to give you an outlook on what we're seeing, more descriptive than prices and days on market, etc. If you do want that, if you want to dig deep, you can always go to our website. You can sign up for our newsletter. We send that stuff out every month. At the end of this video as well, we're going to do something a little bit more fun, and we're going to talk about what types of incomes you need to purchase a condo and a detached house here in Ottawa. So stick around for that. One thing I want to say is that December can typically be pretty misleading when it comes to stats. It's the holidays. Things slow down. It's probably one of, if not the slowest month for real estate in the entire year. Everyone's prepping for the holidays. People are traveling. People actually take their homes off market if they haven't already sold. And buyers, their mindsets kind of shift. They either plug out completely and say, you know what, we'll pick it up in January. Or there are some for sure that do look for opportunities. But I would say on the whole, it's definitely like, hey, well, we're gonna wait and see what happens. So when we're looking at the actual stats and we're looking about the activity and the vibe of the market, it's very difficult to kind of get a read on it because with lower sales, you can imagine, become lower sample sizes. So we see really big highs and we see really low lows, and even median pricing can be a little bit washed out when we go to break these numbers down. All right, so looking at Ottawa as a whole, it's not swinging wildly right now. Kind of recalibrating from December and getting ready for the new year. I think if you've been following along with us, if you've been watching the market at all, you can definitely agree with us that we've seen a massive balancing of the market over the last 2 years. I'm expecting a lot of the same in 2026. And with seeing more balance than we have in years, it's actually a really healthy thing. Buyers have time to think again. Sellers have to price with intention. And the extremes of both sides are kind of fading away. Now, if you are reading the headlines from other major Canadian markets, you've probably seen some of the doom and gloom, certainly in the last 365 days. I will say that Ottawa has not seen the same kind of fallout that we've seen in other major cities, specifically Toronto, the greater GTA, Southwestern Ontario, and Vancouver and surrounding areas. And as Ottawa has come to be known for, things move a little bit slower here. It's slower, it's steadier. The market is based more on fundamentals and wild speculation and those wild swings that we saw in other major cities. That stability is a big reason why people continue to choose Ottawa to lay roots down in and build families and stay long-term. One thing that some people have already asked me coming out of the gates in 2026 is, what kind of interest rates are we going to expect in the new year? And I mean, I don't have a crystal ball. If I did, I probably wouldn't be sitting here giving you the market update. If it's any kind of trend that we saw in 2025, rates are starting to matter less and less. We've kind of like acclimated to what the current rate world is. Like, we've come down from the high sixes that we saw, kind of sitting in the low fours, high threes, and that seems to be the new norm. And I think that will continue in 2026. It's really important to note that even in the last couple of rate announcements and some of the decreases that we've received, it didn't throw gasoline on the market here. People are really watching what they're spending. Buyers are purchasing because they can afford it, not out of emotion. It's a completely different shift from what we saw in 2021, 2022. And because buyers are so well informed and so well educated, their decisions are very strategic. And I think it's important to note that from the selling side, if you can recognize that and you can understand and put yourselves in the buyer's shoes and look at it from their eyes, you will get a deal done. I don't see 2026 as a boom year or a bust year. It's probably neither. I think it's going to be another continuation of what we've seen over the last couple of years. Fewer emotional decisions and more practical ones. And I know that's not flashy, it's boring, it's not rage baiting, it's not even clickbaiting, but it's the honest truth. The Ottawa market in 2026 will not be flashy, but it will be sustainable. Some places where you could see opportunity in 2026 from a seller's perspective, I think that we'll still see high demand for family homes, detached homes, and really sought after neighborhoods. Ottawa will continue to grow. It is still growing despite slower years. And as we continue to grow, we're not adding those homes in those well-established neighborhoods fast enough. So it's definitely something to keep an eye on in 2026. If you're thinking about selling one of those neighborhoods or you're thinking about buying in one of those neighborhoods, you really got to start putting the plan together now. So if you are thinking about buying or selling in one of the most desirable neighborhoods in town, it's really important that you put a plan together earlier than later. You need to reach out to us today so we can start kind of building what the next few weeks, months look like leading up to this. One thing I always harp on in the beginning of the year, and it's a common mistake to try to avoid, is that people trying to time the market perfectly. I'd rather have a perfect plan in place than to try to time the market perfectly. Ottawa rarely rewards timing the market perfectly. What it does reward is planning your strategy and understanding your next move before you make it. So some articles I've seen online have reiterated exactly what I've told you. There will be a steadying of the Ottawa market into 2026. Buyers are going to feel confident purchasing here. We're not going to see double-digit growth. We'll likely see single-digit in both, freehold and condominium properties. But as has been the trend in 2025 and 2024, we're going to see that more traditional buying cycle. Spring is going to be fairly steady. Fall will be great. Summer is going to be okay. And then, as you can probably guess by the numbers in December, things have slowed down considerably. Expect a lot of the same. Now, with that being said, let's get into some of the salaries it would take to purchase said properties in Ottawa in 2026. And for this segment, I'm going to reference a Narcity article that I read, kind of breaking it down across major cities. We just forget sometimes. It's kind of frustrating. Maybe it's a great thing for us, being in Ottawa, but in some places anyway, significantly higher than they are in Ottawa. Ottawa remains one of the cheapest capital cities in the G7, one of the most affordable major cities in Canada. A median house, if you were to purchase something for about $907,000, your minimum down payment would be just over $65,000. That would make your monthly mortgage payment about $5,700, not including property taxes, utilities, maintenance, etc. Believe it or not, the household income you'd need in order to qualify for this mortgage, and that's assuming you don't have any outstanding major debt, etc., would be about $213,000. Now that is considerably higher than the median household income in Ottawa, which is about $129,000. So in order to afford that crazy big mortgage, you obviously got to make crazy big money. Probably not overly realistic for a lot of the buyers watching this video. Now, if you know anything about myself, I've come from a different part of the province. Before I started working in Ottawa, I actually had the opportunity to work in Southwestern Ontario, where condominiums are they're accepted for what they are. I think Ottawa has definitely lagged a lot in that. A lot of the first-time home buyers we speak to, or even just home buyers in general we speak to, there's like a bit of a faux pas around condominiums, and it's not necessarily where a lot of people want to start off. I think that reality check is going to set in pretty quickly over the next, let's say 5 years, and that condominium purchase is going to just become the norm for what people can afford to do. You got to remember, real estate's like a ladder. You have to get in somewhere, and the sooner you get in, the sooner you can start climbing the ladder. To think you're going to save and jump into the top rung of a ladder it's not realistic. And I think, as I said, if you're looking at a median income of $213,000 to support a detached house, or a very nice detached house in Ottawa, what is that going to mean for your lifestyle? Is it going to mean your house poor? Are you going to be able to afford to heat this thing, to keep the lights on, to put water through it? All things you need to consider, right? Like the mortgage, yes, is a big chunk, but like when a bank is approving you, they're not taking into consideration utilities. All right, median condo. And before we get into this, I want to say, I do think there is a ton of opportunity in the condo market, especially for first-time home buyers. The inventory is really great. You can pick a really great area of town if you wish, and you'd be surprised what kind of square footage you get for your money. We're not talking about shoe boxes and some of the the junior suites we've seen in Toronto and Vancouver. You can get a really nicely sized condo. You can even buy something newer for sub $400,000 if you want to be outside the core of the city. According to Narcity, median condo price is about $408,000. In order to purchase that, you would need a minimum down payment, 5%, of just over $20,000, and your mortgage payment would be about $2,600. Obviously, guys, these numbers can vary a little bit depending on rate, like I said, in debt situations, etc. Household income required is about $98,000 to afford that $408,000 mortgage. Elephant in the room, most people are not making that, especially first-time home buyers that are just trying to get into the market. Their salaries haven't increased to the point where they'd be able to sustain that. Sure, over time, they may very well make that, or if not more, in their careers. But I fully appreciate and understand that that's not even a feasible buying situation for most people. What we've seen, not just in Ottawa, but across the country, it's couples, it's, you know, married couples, boyfriend, girlfriend, you know, we even see friends purchasing together now because it gets them into the market quicker. Certainly to do it with 2 incomes is easier than 1. But let me know what you think. I mean, these are obviously subject to discussion and opinion, but I'd love to know in the comments, do you think it's even feasible for most people to purchase something like this? If the average income is $128,000, you're saying the median income is $98,000 to buy a $400,000 home. Like, what does that mean for 2026 and 2027? I would say it definitely justifies everything I've kind of touched on today, and that we'll see a lot more of the same. To no one's surprise, obviously, income has not increased the same way as inflation and home prices. And, you know, it's not to say that anything's right or wrong, or there's certain things to blame for the way that these prices have gone, but like, sacrifices need to be made and realities need to be checked and expectations need to be more realistic. And heading into the rest of the year, I would expect more of that honesty. Fewer headlines, more fundamentals will be a really good thing for everybody, buyers and sellers combined. And you know, check back with us next month and we'll have a little bit more information on where things are headed.